Hello, welcome back. Time once again for our business news, and I'm joined on set now by our business editor, William Edwards. Hello again, Will.
Hi, Louise.
And of course, all the business news is centering this morning on that meeting, that ECB meeting with Mario Draghi, expected to make an important announcement, Will.
That's right. We're expecting him to make good on a promise he made back in July. Let's take a listen.
The ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough.
What we're expecting him to announce is a plan to essentially create money, to print money, some people are saying, to make money, to use that money to buy the bonds of countries that are currently struggling on the bond market, struggling to borrow, basically to bring their interest rates and their cost of borrowing down. Particularly, we're looking at Italy and Spain. It sounds like a good idea, according to a lot of people, including the French. They're saying it will ease the Eurozone crisis, make things easier for the Eurozone. But it's not all going to be plain sailing. And in fact, it's quite controversial in some ways. To talk about this now, we are joined by Jean-François Robin, who is Chief Strategist at Natixis Asset Management. Thank you very much for joining us.
Thank you.
Could you just tell us partly, why is this bond buying scheme, if it goes ahead as we expect, why is it so controversial, particularly in Germany?
Well, the thing is, the whole point of that is to make sure that market understand that ECB is willing to go into unlimited buyings of secondary market bonds, which means that you do not have any limit on that. And the worry on the German side is that, okay, if we do that, we want to make sure that Spain, Italy keep reforming structurally their economies, because they are struggling with structural things in Spain or in Italy. So we want to make sure that if you do that, if you ease the pain in a way in the market side, you want to make sure, contrary to what has happened in last August, when the ECB was buying bonds on Italian side, we saw that the Berlusconi take a step backwards and stop reforming at some point. And that's something the Germans are really, really worried about. They want some conditionality.
So they want to keep up the pressure on those reforms to keep them happening in Italy and Spain. But what conditions can they impose on those countries?
Well, it's why what you do expect from the ECB today is to say two things. The first thing is, well, we are ready. It won't be automatic, but we are ready to act. First thing first, if Spain, for instance, asks from the EFSF or ESM, the European Stability Mechanism, for help first, which means that Spain has to sign a memorandum of understanding. They want to sign something, okay, I will be doing these structural things. So first things. Second things, they will be probably announce some short-term buyings, meaning that every time the bond the ECB's bought is maturing, they will be able to put back some pressure and say, okay, I'm going to buy again, but on the only condition that some structural reforms have been made there. So it's two-way things.
Do you think that Spain would officially have to ask for a bailout in order to get the ECB to push forward with these bonds?
Yeah, I think ECB is going to make it perfectly clear. If they want ECB to step in, first, Spain has to ask for help from the, I would say, budgetary side, which is the EFSF. So first, yes, ECB won't be buying in any way if Spain is not asking for help. So that's really a stepping stone for Spain to ask for help first.
Okay, yeah, that's a big move. So do you think Spain and Italy are at the point where they need to do this sort of thing, to ask for an official bailout? Is this an urgent move by the ECB?
Well, that's a bit of a story of the dog biting its tail, because in a way the market at the moment is totally affordable for Spain, because the yields are really down, because the market is expecting the ECB. But if the yields are down in Spain, are quite low, in a way Spain is not in that urgency to ask for help. So in a way, we are a little bit in this circular story where if we want ECB to step in, once again, Spain has to ask for help first. So.
But if Spain did officially ask for a bailout, and this, of course, on top of Portugal, Greece and Ireland, surely this would have a really terrible effect on the rest of the EU and trying to salvage the euro and trying to sort everything out. Another European country having to be bailed out. What would the effect be?
Well, the thing is, for Spain, we are not talking the same kind of bailout. It's a little bit of a softer bailout. It's a memorandum of understanding. So you say, oh, well, you have to do things, but it's not the same kind of a bailout as for Portugal, Ireland, or Greece, because the Europe won't be giving any help on that. It's not. It will be only some buyings of bond on the secondary market. It's not it's not an official bailout.
Mm-hmm.
And finally, briefly, whatever happens today, it's pretty clear that this won't be the final solution to the Eurozone crisis, will it?
No, definitely not. That will be another step, another big step maybe, but it's only a step. It's not the end of the story, far from it. We're only winning over a little bit of time, but that's pretty much it.
Yeah, there seems to be a never-ending story, really, doesn't it? Thank you very much, Jean-François Robin from the Natixis Asset Management. Thank you for coming in this morning.
Thank you.
Thank you very much to our business editor, William Edwards, as well. Now, that's where we leave this edition. We have to do the markets, though. I'm just being told reliably by my producer in my ear. I'm sorry, Will. I'm so keen to...
Let's fit them in. I think we've got time for the markets. The European markets are just opening up, actually. So let's show you how they're doing at the moment. In fact, there's quite a bit of a bounce ahead of this, what we're expecting to hear from the ECB. Whether that will prove to be over-optimistic, we'll see later on today. But you can see there all the major markets up by around 0.25 to 0.3% there. Let's just take a look how things have closed in Asia as well. There's a little bit more optimism there at the end of the day as well. You can see earlier we were showing a mixed picture, but maybe the ECB announcement, everyone's optimistic ahead of it. We'll see how that closes out at the end of the day, of course.
We will. We'll have to wait and see on that, Will. Next, Lufthansa's cabin crew have been on strike twice in the past week. Well, now they've announced plans to walk out again this Friday. Let's look at what this will mean for passengers.
Passengers flying Lufthansa through German airports Friday may need to rebook. The company said it will cancel 2/3 of its flights after airline attendants announced a 24-hour walkout at 6 German airports. It will be the third strike to hit the company since last Friday. Lufthansa airline attendants are walking off the job in search of a 5% pay increase and an end to the use of short-term contracts. The company has conceded to a 3.5% raise, not enough to tempt workers after 3 years of pay freezes.
We are still here because Lufthansa has not made any compromises on their offer yet. They are sticking to 3.5% on a bad contractual runtime, which for us is unacceptable.
Negotiations between the UFO Flight Attendants Union and Lufthansa broke down more than a week ago. They have yet to resume.
We are ready to talk, and we offered many times to come back to the negotiation table. We didn't leave the negotiation table. We asked UFO to get in contact with us so that our passengers are not negatively affected by this.
Some analysts have estimated that such industrial action could cost Lufthansa 50 million euros per day. But the company is under pressure not to give in to workers' demands. It's trying to improve annual earnings by 1.5 billion euros by 2014, part of a wider effort to stave off threats from budget carriers and growing competition from Gulf airlines.
Well, staying with the airline industry, Qantas has announced it's tying the knot with Emirates, Will.
That's right. In fact, they're getting rid of BA, British Airways. They did have a deal with them. That's no longer going to be the case. They're joining up with Emirates because they feel they can better complement their services. Qantas, of course, in financial trouble for the last year or two with international routes being hit by high fuel prices and rising competition. Emirates itself, they're based in Dubai. Qantas is now going to put its European routes through Dubai and coordinate scheduled sales and pricing with them.
Well, thank you, Will. We're now moving on to a story that I've got to say I have a very keen interest in. It's high-end, high-heel shoes.
That's right. Christian Louboutin. I'm sure, Louise, you're familiar with
course.
the red soles, the famous red soles of the Louboutin. There you go. You can see them there.
There we go.
There has actually been a
the
court
heels.
case about this, if you can believe it. Yves Saint Laurent started selling all red shoes a year or so ago, and Louboutin were granted an injunction. Now, an appeals court has ruled that in a way both are right. Yves Saint Laurent can continue selling shoes that are all red, but the contrasting shoes with the uppers a different colour to the red sole, they are now going to be a Louboutin trademark. So look out for them. You won't be able to get red soles on their own without them being Louboutin.
You know, Will, you talk about shoes and fashion so comfortably. You should be a fashion expert rather than our business one.
Oh, well, maybe a move is in store, Lou. We'll see.
Thank you very much for your business and fashion expertise. Our business editor, William Edwards, there. Time for us to go. Do stay tuned, though. Stuart Norville coming up in just a few minutes.